Well, hello everyone for another episode of REKT Division. I'm here alongside OSF. Last week, we looked like we were breaking below support. This week has been another relatively weak period for crypto. Bitcoin hanging out just above 63K today, 63.8. Solana's down about 10% on the week, and ETH weirdly has been up slightly, up about 2%. But the general timeline sentiment and just general crypto sentiment has definitely gone through the ringer a little bit this week. I feel OSF. It's been a little bit of pain. This chop is definitely I don't know. It's shaking a lot of different people out. How are you feeling just broadly about the market compared to last week? And then we'll go into some of the main topics.
It's a tough one, isn't it? It just feels like a series of painful blows for crypto right when we have moments where it feels like we're coming back. Michael Saylor and MicroStrategy raised more debt to buy Bitcoin, and everything was pumping, and it was getting towards 67K, and it felt like we'd seen the local lows, and then lo and behold, the German government, or I don't know where their Bitcoin sits, whether it's the government or somewhere else in Germany, but started selling their holding of about $3 billion worth of Bitcoin. So the timing really couldn't have been worse. If we had those sales, then Saylor came in to buy Bitcoin, it would have been a better print for him, and it would have provided more support at like a lower level. But unfortunately, the timing of those was really the wrong way around, and whatever he bought got absorbed very quickly. So yeah, just it's not a very welcome headline, and obviously we have the Mt. Gox stuff in the background too, which is expected to potentially come to the market over the next few weeks if the majority of it hasn't already been sold OTC anyway. So just some tough blows to take really amid what's been an extremely strong macro environment. Now I know Nvidia's turning a little bit today, but you just had stocks hit new all-time highs almost every day in a row for the last 2 weeks or something like that. And it's just sort of a bit demoralizing to watch crypto not bounce. But we've been here before. This was the same thing that happened in the summer of last year, right after the BlackRock ETF headline. And we had amazing macro strength last summer, all of last year actually, and crypto just didn't budge. So it does get stuck in the mud, I think, sometimes when you have some big sell pressure. It's just a question of if we can break through it eventually, which I still think we will.
Yeah, one thing I've learned about these sort of periods of chop is that the timeline can get quite sensationalist, and you can easily get shaken out on down moves. And often the simplest thing is to do nothing. But it has been a frustrating period. Bitcoin obviously broke below that 66 level support, and now looks like it's maybe heading even towards that 60 level support. If it breaks below that, I think a lot of people get a little bit scared about the state of this time, the state of this market. But macro, nothing really feels like we're going to be thrown off course majorly. The inflows for the ETF have obviously turned. So we've had a bunch of different outflows, I think close to $1 billion over the last 8 days. And then that would have been eaten up by MicroStrategy coming in and buying 750 million with a convertible note. But then, like you said, the German government, which had held some Bitcoin, which is confiscated off an illegal website, has started to sell, and it's looking like it's selling about 100 to 200 million every day at the moment, which is, it's just not really needed. Let's put it that way. And they've got a huge amount, which is 3 billion. And like you already said, you have some other big pockets, let's say, of Bitcoin that are going to be coming over the next few months. Mt. Gox and potentially even some of the Silk Road Bitcoin could move. So I think, I think people are just getting a little bit wary. And you've seen, I think this is 5 weeks now of Solana being lower. And that was one of the big winners this cycle. And that's kind of dragging, I think, sentiment down with it. And I'm seeing a lot of popular traders on the timeline as well who are kind of throwing in the towel. It feels like, or at least saying we're probably looking at a rally in Q4 period even to get over all this, get over all this supply. I'm not too sure about that. I think these rallies creep up on you when you maybe even least expect it. But it does feel as though near-term sentiment is pretty downtrodden. In terms of
I've got one quick comment on the ETFs. I reckon those outflows, if you look at the outflow data here, be cool if we can pull this data up, actually. I'll put it into the chat. But if you look at the inflow outflow data, the first week of June, we had a ton of inflows from FBTC, the Fidelity Bitcoin ETF. And pretty much for the last week, the outflows have all come, the majority of the outflows have all come from FBTC, again, Fidelity ETF.
Yep.
And if you look at the CME price action and the cost of funding, etc., in that first week of June, it's pretty clear that that flow that came from Fidelity was hedge funds putting on that basis trade, buying the ETF and shorting futures. And given that unwind has also come from FBTC, which isn't usually like, most of the flow comes from IBIT. IBIT's been inflows all the way through, no outflows at all from IBIT, from BlackRock's ETF in the last, God knows however long, but definitely not in the last 2 weeks. So given those, we had massive inflows for FBTC and then massive outflows for FBTC. And if you overlay that with the cost of funding, I think it's just people unwinding that delta neutral trade. So I don't think that's actually, the market got really excited about the numbers at the beginning, and now it's gotten really worried about these numbers because they're only taking in one piece of the puzzle there. But I personally think that's not really a net reduction in Bitcoin risk as a result of the ETF. I think it's just people unwinding that trade. But pure speculation, but that's what I think it is.
That's been one of the things that's been very difficult to work out the correlation for at the moment. I think I saw something like versus the amount of inflows versus the increase in open interest, it implied that around 25 to 30% of the ETF inflows were going to this basis trade. If you look at the increase in net open interest, that being said, like you can never tell. But the fact that, like you said, it's just the Fidelity ETF does make me feel as though we could have a more unwind of that particular trade. And you're right, that funding has really reversed in the last couple of weeks, which has been quite a big deal for the market, and that's been obviously a popular trade for hedge funds. In terms of the relative outperformance, I guess I'll just throw a question here: is ETH has had another strong week. ETH, Solana, or Solana ETH, wherever you want to look at it, has moved about 30% in the last 5-6 weeks. It's now trading at 0.37. It looks like ETH BTC is at 0.55. You've seen a big outperformance of ETH going into this ETF. This week, you saw the SEC come out and say they were going to drop the investigation against ETH, which was taken very positively. You've had some movement on the ETFs, and seemingly they are going to be coming with some of the S1 filings. They're going to be coming at the end of this month or early next month. Do you think this outperformance of ETH is a medium-term trend? Do you think we are going to see ETH BTC probably push up towards 0.6 and beyond, and then Sol ETH, particularly because Solana has been such a massive outperformer, also continue to trade down? Like, what's your view there?
I do. I think the tide is turning, and has turned to an extent on ETH. It's been a pain trade for many for, let's say, the last 12 months or whatever, the second half of last year and much of the first half of this year, because Bitcoin had all the limelight with its ETF. You had this massive Sol narrative come about, and all the meme coin activity in Sol, and all the metrics in Sol going through the roof. And so it's kind of like, well, why do you even, I don't want to say why you even need ETH, but it just didn't have anything really going for it compared to Bitcoin, Sol, and perhaps some of the other newer L1s at the time. And as a result, I think positioning in ETH has just probably changed. Like, I know, anecdotally at least, I know so many people who've sold all their ETH for Sol, sold all their ETH for meme coins, sold all their ETH to go into other L1s, sold their ETH for Bitcoin because they're, feel more secure with the ETF fundamentals there. And then on top of that, right when ETH was kind of like at the most flooded point, it turned out that people thought the ETH ETF wouldn't get approved either. So it just really had like, before this ETH ETF thing, you could look at yourself and think, well, you could look at ETH and just think, wow, this really doesn't have anything going for it right now, whereas other tokens do. And I think that's just a classic outcome where people have just been like, okay, I'm fed up, I'm moving on. And you've suddenly had this shock ETF headline. And suddenly it's like, wow, people are now underexposed on ETH because they've moved on to other things. And that's why I think you're seeing this great outperformance in the last few weeks. And I think it's here to stay. Look, if you look at what happened with Bitcoin since we had the BlackRock ETF headline and since the ETFs got approved, Bitcoin has outperformed most coins in the market. Like, there's only maybe a handful of coins with north of, let's say, $1 billion market cap that's outperformed Bitcoin. So that's all been driven by TradFi and ETF flows. And we're about to see the same thing for ETH. Now, flows could disappoint, we don't know. But up until the ETF trades, we know we're going to have new market participant for ETH that we haven't had before. And we've seen the impact of that on Bitcoin, which is higher prices. So I think that trend is here to stay, to be honest with you.
Yeah, I'm in the other camp. I think that this cycle is not over. Firstly, I think part of that would point to a slowing down of the cycle, and I also think that for me, when I look at the market caps, the relative market caps of them all, this is a good, because it's actually done by market cap rather than price. But yeah, you have ETH BTC at 0.34, so roughly about a third. Solana right now is trading nearly a sixth of the market cap of ETH. And just to me, that just doesn't feel where I see in the trends in crypto right now. I think a lot of the TVL is on ETH, but a lot of the activity that I see seems to be on Solana. A lot of the culture seems to have moved to this cycle. So my bet is that I just do not see a world where ETH goes to, let's say, 500 billion to $1 trillion market cap, and you don't see an outperformance of Solana, just because a lot of the trends which are driving that market, whether it's, let's say culture is defined by meme coins and NFTs right now, and then use cases are defined by things like DeepIn and stablecoin transfers, and I guess DeFi to a certain extent. I think ETH has got DeFi perhaps stronger than Solana, although arguably Solana DeFi volumes have been massively helped by the trading of meme coins. But on things like DeepIn, on things like meme coins, like I just said, even NFTs to a certain extent, I think Solana doesn't feel like a sixth of the price of ETH. It feels like it should be much, much higher, like almost touching ETH in terms of activity, at least that I seem to see, and just where I see builders and where I see the trends of this market. So for me, I think we will continue to see this outperformance into the ETF, and then I think we will start to see an outperformance of Solana. We did see, even actually over the last 24 hours, that the first signs of ETFs for Solana. So there was a Sol ETF, which was filed for in Canada, which is similar to what happened with ETH. And then you had a futures ETF in the US, and then you had the spot ETF. And then I think you have some big tech upgrades, namely in Firedancer, which unfortunately looks like it has been pushed back more to maybe early next year rather than summer of this year. But there was some speculation that could be sooner. You saw Mert over the last 24 hours said there was going to be an announcement even today that would change Solana forever. So I don't know if that's hyperbole, but that could be relatively big. But yeah, my guess is that Solana is going to come roofing back. I think it's what's happened now is a bit of deflation in the meme coin market, and that's hurt Solana. But I still find it very difficult to see a world where that doesn't go higher over the medium term. So I'm still a Solana bull versus ETH here, although I hold all three of them. Yeah, I know you hold all three too. I think it's difficult.
I do hold all three. Yeah, I do hold all three because I do like and ultimately like them all. But I just think, I don't know, like all the stuff that you mentioned, if you think about Bitcoin, right? Like there was a period when ordinals were flying. There was a period when BRC20s were flying. And there were people like, I want to be on the Bitcoin ecosystem and get Bitcoin beta because of this ETF thing, right? And then because Solana had this big narrative, people were like, okay, how do I buy meme coins on Solana? How do I find Solana beta? And that's how you get all that TVL and all those numbers. So part of me is like, what comes first? Like the narrative or the activity? Is it the activity that makes the narrative, or is it the narrative that makes the activity? And sometimes I think the activity comes after the narrative. And so if you do have this big ETH ETF narrative, and by the way, don't forget BlackRock has a $100 million tokenized fund on Ethereum, right? So, and Larry Fink is one of the most influential people in the investing world. So if they start pushing an ETH narrative, I think you'll start to see some of this activity move back onto ETH, because I think the narrative can lead that. And whether that's, I mean, DeFi is still probably the largest in ETH, but whether that starts to be meme coins again, for example, if meme coins come back to ETH, don't forget ETH has L2s, which also allows for meme coins and any other activity to be materially cheaper as well. So I don't know. I just feel like we're potentially at the precipice of a big ETH narrative hitting the market, and it's brewing. We know it's brewing because of its outperformance in the last few weeks. And I wonder if once that becomes fully fledged, whether we see some of that activity move from Bitcoin and Solana to ETH, and also possibly, dare I say it, even NFTs on ETH as well.
I think you hit the nail on the head. The one thing that ETH has right now, and it probably has this golden period before, let's say Solana still has questions about whether it's a security or not, but it has this golden period of potentially institutional adoption and tokenization. And it has probably 24 months, I reckon, head start here, maybe slightly even longer, to see if some of these big funds start to. I mean, you said 100. I think it's hundreds of millions of dollars now that fund that BlackRock have, and they've been very public about wanting to put some of their funds on ETH, as has Franklin Templeton and a few other big fund managers in the US. So that's what they do have. They have a very strong RWA narrative, in my opinion. I think for the other things mentioned, you do have to believe in the L2 story, and that has still not really happened. Base has probably got the best shot, it feels like, at the moment, but it's still, I think, a show me story. But ETH does have this golden period right now where it has institutional adoption, and you could see a lot of building from big TradFi houses over the next 18 months. So I'm bullish on all three. I guess my point is, on the RelVal, I just don't see a world where Solana doesn't catch up. I just think right now it's being beaten up because meme coins are being deflated, and that's harming a lot of the activity that's happening on Solana. But I think having the fast chain with a ton of throughput and it's cheap, you can build a lot of stuff. And I think the people that are kind of day in day out building and also running some of the culture just feels as though that's where they're slightly trending. Anyway, we also did touch on the idea that this has been a hugely bullish period for macro. You've seen, I think, the NASDAQ hit 4 all-time highs last week, or maybe even 5, actually. I think it was Juneteenth. But pretty much daily all-time highs at the moment for the NASDAQ. And most of that is being driven by NVIDIA, which flipped Microsoft to be the most valuable company, although I think it was reflipped again yesterday. But Microsoft itself has its own AI story. NVIDIA's obviously been driven by chip demand for AI. NVIDIA, notably, is one of the only things to have beaten Bitcoin in terms of returns over the last 10 years. What do you make of this now? Do you think crypto is going to continue to lose focus here? Do you think that's part of the reason why we're having this sell-off? The other thing that seems to be coming even more to the forefront is robotics as well. Elon, when he won his pay package last week, pointed to the idea that this could be a hundreds of $1 trillion market, maybe even quadrillion dollar market for robotics, and that Tesla could be a $30 trillion market, $30 trillion stock on the back of that. Do you think crypto is starting to feel, I don't know, not boomerish, but it's just losing its shine compared to these two gigantic narratives that are happening in macro at the moment?
Yeah, look, ultimately, I think it is. One of the biggest things for me for being bullish on crypto this year was that last year the NASDAQ was up, 40%, almost 50%, somewhere around there on the year, like unprecedented gains. And so I was like, well, this year for the NASDAQ to be up a similar amount or even 20%, that's a massive, massive move, right? It's very hard to make a move like that in the NASDAQ. So for people who, and that's not to say it's going to go lower or anything. It's just like you get to a point where we've had a big move, and naturally the next move is a lot smaller, and we don't see such great big moves in equities like that these days, unless it's after a big crash. So we'd had the big crash, we had the big move higher, and I felt like, okay, cool, maybe we see like 5 to 10% returns in the NASDAQ this year, maybe like 3 to 5% the S&P 500. I don't know, like nothing crazy to what we've seen. And obviously, I think we're sitting here with almost 20% year-to-date return on the NASDAQ. So, if you believe that like we're not going to have this great big return in traditional stocks, then you're almost forced to look at crypto, be like, cool, why would I still hold this when it can only go up 5% this year? Or I can go and buy Bitcoin again, it can be up 300 or 400% this year, or ETH or Sol and whatnot. Like, that's what you need for people who are stuck in traditional finance to move to crypto. They need those great big returns to move them over and force them to switch to chase that. But what's happened this year? Well, you've had stocks like Nvidia outperform a huge amount of the crypto market, if not pretty much all of it, I guess, right? Like, how much is Nvidia up year to date versus Bitcoin? I think they're probably not too. Nvidia must be higher, right? Bitcoin's only up like 56% or something year to date. I think you're muted, by the way, Michael. You're on mute.
Yeah, Nvidia's up 169%, so it's up a lot more than,
and Bitcoin's up like 50ish,
50,
like that.
Yeah, 50ish, yeah.
Right. So how can you convince someone to move from buying a real stock with your stockbroker account without having to change your money into crypto and go through all these, hurdles to get your money into crypto? I guess you can buy the ETF now, but how are you going to get someone to switch from that to crypto when a traditional stock which is a real company with real cash flows, with public quarterly accounts that you can look at, everything is transparent, is going up by that much? It's hard to beat that, right? Like,
yeah, look, it's tough. There's no doubt. There's no doubt it's taken the shine off crypto. I think the one thing I would say about AI is that Nvidia is a hardware company, and in these sort of tech cycles, often hardware companies are the first to rally, and then you move into kind of what you can do with the AI, more software or even SaaS, or that's kind of how the internet age happened. So, although I think AI is an absolutely massive trend, there is some arguments, that Nvidia might not be the best way now to play it over the next 10 years. Whereas I think Bitcoin is simple. It's the best. It's the top asset. It's clearly outperforming even this cycle, and it can easily outperform, I think, going forward. The bull cases, obviously, for Bitcoin, even from the mega bulls, let's say like Cathie Wood, are in the millions by 2030. So we're talking about roughly, let's say, a 20x from here. But when I started reading through some of this stuff, I think AI, like I just said, it's difficult because you have only really the major tech companies have the capabilities to kind of put out these LLMs, and they already have monster valuations. And it's also, like I said, it's very difficult to play that trend. Like, you could have bought Cisco at the wrong time during the internet age, and you kind of would have had relatively flat returns. So I think people are scared about diving into Nvidia, even at a $3 trillion market cap, even though it has this slightly unassailable lead when it comes to these AI chips. Who knows in the coming years if you have some of these major competitors in Europe or maybe even China catch up with some of that technology. But it does feel like they have this monopoly, at least for the next few years. It's difficult to imagine that being challenged, or at least their ability to pivot maybe into other things will also be helped. Robotics is a crazy one because it feels as though that one's also been slightly under the radar. Obviously, Optimus has been one of the major sections of Tesla, let's say. But when they started coming out and talking about this week, I feel like it perked up a lot of interest in that space. And with declining populations, you could arguably say, yeah, this could be an absolutely huge industry. Hundreds of trillions might not be out of the question. Maybe even into the quadrillions. There's a lot of talk of quadrillions now with the market size of these things, which I think is kind of wild. Crypto, I feel, is going to be challenged to do more than 20x over the next 10 years. And I just don't know if we're living in just by what I just said with Bitcoin. I think low millions for Bitcoin would be a massive win. Do I think that some of these trends in robotics or AI could be even more parabolic than a 20x? Yes. But it's more difficult to work out how to play them. That's basically what I'm saying. I think Bitcoin is a clean asset to own, and you're owning debasement. You're owning basically more cowbell, as Raoul calls it. More money printing, which I just don't see ever reversing in a world of such high global debt, and a need for stimulus. So I think it's a cleaner asset in some ways, Bitcoin, to trade. Like, you can't really go wrong, in my opinion. But I would agree that maybe you will be giving back some of these gains. And when you see these sort of moves and things like Nvidia, yeah, it's going to be tough to argue with them over the next 10, 20 years. And some people might even start to look at Bitcoin as slightly boomerish tech. It could be in 10 years, it will be 20 years old, or 25 years old even. So I think there's something to be said about that. Like, it's we're at the different stage of adoption, I think, for some of the TradFi stuff. Do you own any of these? Are you loaded up on Tesla? Have you loaded up Nvidia at all?
Yeah, the only time I've ever owned. I'm just saying. I'm not saying, like, you can putting on trades versus what you think can differ. They don't have to be mutually exclusive. And
yeah.
I guess my point is, it's just the pitch to move to crypto has been a much more difficult, because, I mean, you can say, look, crypto should catch up to all this stuff. And I do believe that. But most humans are not wired to think that way. Most humans are not wired to buy dips. They're not wired to buy underperformers. They're wired to buy momentum and things that do well. It's the old classic. When markets are up, everyone's like, oh, now's a good time to put your money into the stock market. When actually the best time to put your money in the stock market was when they were down. You know what I mean? And so this is the same thing. Like, I think crypto needs to do well to regain that attention away from the likes of Nvidia and all these AI and robotics stocks. I have my money in crypto because I think it can catch up, but
there is an argument to say that also, when those trends become even bigger, you will need programmable money. If AI and robotics become absolutely massive, the idea of using fiat currency or even digital currency just doesn't work as well as decentralized on blockchains. It could still be centralized on blockchains, but yeah, blockchains as a form of exchange become even more valuable for some of these AI agents, or if bots are going to be used in a similar sort of way. So maybe we'll just see all three of them as absolutely massive trends, but they'll just have different parts of being in the spotlight. But it's certainly been a period for the last month where AI has really, really ripped, and crypto has suddenly been seen as playing kind of second fiddle in that world, which I don't think has necessarily helped. In terms of the next thing to kind of bring up is, we have seen a couple of very large airdrops this week and last week, which was Layer 0 and ZK Sync. Multi-billion-dollar airdrops. ZK Sync is an L2, and Layer 0 is kind of like a bridge. You use it to have take protocols and move funds across various different chains. Interestingly, both of them were met with a lot of criticism on the timeline. And Kobe, who's a relatively well-known trader in the space, came out with which I thought was a thought-provoking tweet, which was, if you're a founder, in my opinion, you're probably thinking about not doing an airdrop at all these days. The downsides are much greater than the upsides now. You just give away 20% of your tokens to extremely low-value users with likely zero retention, over half of which farm to be instantly sold, and all with cost basis close to zero. You need high FDV for the airdrop to be considered good, creating weird incentives for float FDV. If you do anything slightly wrong, then you get massive backlash. The last two big airdrops, ZK Sync, EigenLayer, both had ZK Scam and EigensCam trending in the days after the airdrop checker was announced. Plus, a leading project that did no airdrop did pretty well on the market recently. So if you have a good example of a different path working well, maybe it's over for airdrops after layer 0. Now, similarly, layer 0 ended up with some FUD as soon as it launched. And all of these tokens haven't really done well as soon as they've launched. You get a lot of people instantly selling them and just kind of moving on to farming the next airdrop. What is your view on this? Because I think it's been very, very clear that airdrops have not performed well this cycle. I don't think, apart from maybe Jupiter, most, if not all, are now kind of below where they first came, at least the major ones. Do you have a solution for this? Because I think it is one of crypto's critical problems right now.
Yeah, I don't think stopping airdrops, should founders stop airdrops? I think the answer to that is no. Because part of crypto is participation, getting people to use your dApps and the models and everything you build and rewarding them for it. Like, one of the great things I think about Web3 is this idea of being able to consume to earn. And that has worked well in many different environments. And I think it's been done well in the past. But because that model perhaps has been overused, I think people have gotten too aggressive with it. And the issue we've had is, as you mentioned, is like low float, high FTV, a lot of VCs getting involved, investing heavily in it, and then dumping straight away. So I don't think the answer, just to take the other side a little bit from what Kobe is saying, I don't think the answer is just to stop doing airdrops. And his point on the community will be angry with you whatever way you cut it. I mean, that's just the case of starting any kind of business to any kind of consumer, right? Like, you're always going to have people who will complain. You're always going to have growing pains, and you're never going to be able to make everyone happy, especially people who know if they can act entitled, it may grant them access to further rewards down the line in the future. So I think as a founder, I think you have to be much more headstrong and just be like, look, this is what we're doing, this is what we're building, this is how we're going to reward people, and either you like it or you're not. That's that. And there's an element of founders actually not doing anything wrong, but people who are farming these rewards and spending a lot of time and effort in using the protocols and farming all that kind of stuff, having this view or this expectation of X amount of money, whatever it is, I should get a 5-figure airdrop, I should get a 6-figure airdrop, and then not getting it. But the only people that created those expectations really were themselves, not the founders. There is an element of like expectations being mismatched between founders and users, but I don't think stopping this model is the right answer. I think this is one of the best things about Web3, this idea that you can use things and earn whatever token governs someone's or underpins someone's protocol. And that's something that's very unique and powerful to economic behavior in Web3. And I don't think it should be stopped. How I do think it can be improved is don't fill your whole round with VCs that you know are just going to take the 50x or 25x and dump your token afterwards. And now that's easier said than done, because if that's your only source of funding, that you have to go out and build this thing, then it's a difficult thing to say no. Like, where else do you get funding from? So I don't know. Beyond that, it's difficult to judge what the perfect solution is. Maybe improve the tokenomics. Maybe just have the whole thing dropped at the beginning and just get the selling over and done with, and then grow from there. I don't know. That could be an interesting way to do it.
Well, some of the fun for these past couple of airdrops was to do with the idea that they actually did bring in quite a lot of bot protection. So they went after so-called Sybil accounts, so accounts which are basically bot farms, which go on there and try and farm the token, and that caused some FUD. I think that's good. Like, I agree with you there in that it does make sense to reward users, but actual users. If it's just bots, then you're not rewarding users, and that is I think Tristan on even this post has actually gone into some of the things about that. So the idea that we actually have real users who are complaining, it's not really that. It's a bunch of people who are bot farming. ZK Sync, although is a relatively well-known L2, there's not a lot happening on there. It's kind of less than 1 billion TVL. I think most people who are talking about ZK Sync were talking about the idea that they were farming it. And I think that there's something to be said there, in that there was a lot of bot activity going on there, and that perhaps caused some of the backlash. And even for layer 0, I think similarly there was a lot of bot activity, and they've kind of gone after it. I do think there is a rush to a token sometimes in Web3 because of those incentives around VCs. I think how a lot of VCs are incentivized is kind of this double dip method where they get the token and they also own the equity in the company. So they kind of protect themselves, which you could argue they may need in crypto because it's so unbelievably volatile. But it does sometimes harm the business over the medium term, I think, to rush to produce a token. I don't think often these tokens are even beneficial. Sometimes it can lead to FUD against the actual protocol itself, particularly on poor design. Like if we just end up with a DAO governance token, like we have so many of those in DeFi and they're all trending towards zero because there's still not a way to kind of to do the feeds correctly. And then similarly, I think they are used as a trick to try and increase initial adoption. But then when the token comes out, it leads to kind of you are inviting short-term users onto your platform rather than actually building a better product. So I think I would kind of side more with Sobi on this. So with Kobe on this one, in that we don't always need a token. I think there are great apps out there which don't always need a token, and I think over the medium term, founders will be thinking more and more: do they need? They really need to think of why they need this token. Why in a month's time are you buying layer 0 token? Let's put that out there. Like, I think it's out there to a certain extent. It's got a multi-billion-dollar market cap, but we really do need to have a strong fundamental about why we need these. And if it's just, it's a DAO who manages some of the revenue of the protocol, that's not even getting back to users in the way that we want it to. So maybe until we get better clarity on some of the regulation even around that, we should delay some of these tokens. Yes, you might not get amazing initial adoption, but you get adopters like this. You get farms, and maybe it's not good for you as an entrepreneur to be inviting that sort of thing on. So I think it's a lot of short-term money grab, and it's leading to bad outcomes for pretty much everyone. It's leading to bad outcomes for users and even the protocol owners. Like if your token is down only, that can often decide how people view the success of your project, and that's often not how it should be. It's down to things like tokenomics, like you said. So I hope there is a slowdown in this sort of stuff, because I think we do need to slightly question that model.
There will be a slowdown in it because they've performed so badly and there's been so much negative press on the low float stuff. So there definitely will be a slowdown on it. And I think new tokens that come to the market will either airdrop a larger amount to holders and try and get the float more in line with the FTV, or have different vesting terms that maybe don't create this perpetual sell pressure for the next 3 years, whatever it is, right? Interestingly, hard to get alternative funding, but and then VCs won't fund something unless they can make money on it and then monetize it. So it's hard to combat those mechanics, and the difference really now from now compared to maybe 3 or 4 years ago, compared to 4 years before that, is that there's just tons more supply. There's like loads more deals, so people have more things to choose from, and that's a big difference as well. I guess oversupply of tech. I think, like, how many different L2s do you really need? How many different roll-ups do you need? you know what I mean? So there's that element to it as well. But I think if it gets to a point where all these tokens are not successful, people will find it hard to raise money from them until someone figures out a way to do it in a way where real value actually gets driven to these tokens, and they're not just a quick 100x for the VCs, and then everyone else just sits in this descending pool of
nothingness. Yeah. Look, Jupiter, like you said, it is been one of the better performers, and that didn't really go after VCs. So maybe it is a VC thing, and we'll see slightly better tokenomics from those. One thing that has also not had a great week is meme coins. We've seen all of the major meme coins head lower. Pepe is down about 30% from its highs. WIF is down about 60, I think 60 to 70% from its highs. Similarly for Bonk, Floki, all of the mid caps. That has been one of the biggest trends in crypto. And in terms of altcoins all going lower, meme coins have generally had a better last 12 months. Do you think we're now approaching the end of this? Do you think meme coins are, the meme coin season is now over, or at least maybe just over for a short term?
I don't think we are approaching the end of this. You have to remember, meme coins are really high beta, right? And we've seen Bitcoin have difficult price action in the last couple of weeks. You've seen the same across majors. Look at alts. Alts have been destroyed. Like many alts are down on the year now, right? Meme coins are not down on the year in most cases. They're still up a lot on the year in most cases. So I think you have to remember they're high beta. And when you have these moves like this, they will move a lot lower than the rest of the market, just like how they moved a lot higher than the rest of the market on its uprising. So I don't think it's over, number one. Number two, you have to understand where this meme coin phenomenon comes from, and it comes from this left curve behavior. It kind of comes from this antithesis of this is how you should invest. This is how you should have your 60-40 portfolio. And this is how you should operate with risk management, all this kind of stuff. Like the meme coin left curve idea just completely throws all that out the water. It's just like, it's the GameStop phenomenon, right? It's like if loads of us can all be brain dead about something and just go for it, then you can affect price action, especially in crypto where market capitalizations are relative to traditional stocks are so small. So I don't think it's over, because that's like saying the left curve behavior of humans is over. And I don't think it is. I think it will come back. And people get more left curve when markets do well, when markets rebound. And so I think we will see that when the market rebounds from here. It's just a tough time for the market overall. And as a result, meme coins are struggling. But I don't think, I'm not writing off left curve behavior of humans. I think we will see more and more of it. And I think meme coins are just perfectly suited and built for it. They're just volatile, and we're just seeing that volatility now.
Yeah, I'll play devil's advocate slightly here, because I also am a big believer in memes. But I do think what we are seeing is a shorter term life cycle for memes, mainly since Pump.Fund came in and you're seeing 500,000 meme coins every single month. You are starting to see, particularly on Solana, it's very easy to churn into a new coin. And also holders are kind of expecting their memes not to last as long. They kind of have this life cycle of a normal meme. We've spoken about this before, but they feel more like attention coins than they do necessarily around meme coins. And sometimes people recognize that the attention is not going to last that long. So it is a game of hot potato a bit more, I think, on things like Solana. And when you have this many new tokens every single day and not that many inflows, you're starting to see a lot of the major Solana coins particularly head lower. Interestingly, Pepe's held up the best, and that's obviously on ETH. But there's far fewer coins, it feels like, at least daily coins on ETH mainnet. I know Base has been having hundreds of thousands of coins, but I thought that it was very interesting this week that even Pepe wasn't the best performing ETH beta coin, that went to some of the ETH DeFi coins this week.
Would you, so there's someone asked this question actually on the Real Vision website. I thought it was a good point to throw it in. Would you add to your Pepe or your WIF bags, given this big backup? You mentioned Pepe down 30%, WIF down 60 or 70%. Like, would you be adding risk to meme coins here? That question was from Melvin on the Real Vision website.
No. I have Pepe and I have a low cap Solana coin, which I created. But no, I think we could be here for a medium term period where we need some consolidation here in memes. I think out of the majors, Pepe looks the strongest. You can even see that on these charts. Like it just feels as though it has the best relative value story, in that a lot of the other meme coins are kind of related to Pepe. Even if you look down, Brett on this book of meme, these are all to some extent Pepe derivatives, and I think there's something to be said about that. Whereas I think some of the others, it's easy to switch out. Dog with Hat was created in November. It's quite easy to think that I'm going to buy another one. There was another one even this week, like a cute dog meme that ran up, and that's quite easy to do on Solana. So I think people quickly are quickly able to move their attention to something new. So I think we could have seen the short-term highs for some of these major Sol meme coins. I'm not putting a downer on left curve behavior. I think we'll come rip roaring back, but I don't think it maybe is for the next month or two.
I'll take the other side of that. I'll take the other side of that. Yeah, I'm not adding to risk here because I just have a lot of it already, but I think we will see them. I think we will see them come back, and you just know as soon as they show the slightest bit of bouncing, everyone just runs in and FOMOs in because they've experienced that crazy price action before. So I think we will see it.
Yeah, look, I love my Pepe bags. Like I'll hold that until I die. I guess I'm just working out when relative outperformance is going to happen. This was interesting this week that ETH I think outperformed Pepe this week, which I thought was kind of wild because that doesn't normally happen, and that told me a lot about where the market is, at least for memes right now, because it's no longer you buy them as the beta play. It feels like they're slightly outperforming the majors there, which I thought was interesting.
We've got just under 15 minutes left. Should we do the audience questions and get some of those in?
Yeah, sure. I think we're largely kind of done. So we can kind of go on to the audience questions.
All right, let's do that. So this one's from Turbo Goose on the Real Vision website. With fears that the UK will raise capital gains tax to 40%, do you see a risk of this happening across the world and completely killing the market in this cycle? And of course, Canada very recently increased its capital gains tax to match that of your marginal income tax rate. And in the US, your short-term capital gains tax also is your marginal income tax rate. So do you think that happens in the UK? And do you think that's a big headwind for crypto this cycle?
Well, you tell me. You actually made some moves about this exact thing. If they're going to increase taxes after the end of this election, maybe now is the time to lock in some of these gains.
I mean, I don't know. They haven't said. Labour have said we're not increasing taxes, and then they've further gone to give more detail as to the fact that they're not increasing income tax and they're not increasing VAT and I think council tax. But there's no mention of capital gains tax. And of course, they keep reiterating we're not going to increase taxes on working people, and capital gains tax is kind of like the rich person's tax. If you just, sit there and clip your gains in stocks and crypto and whatnot as your main source of income, that's somewhere they could very easily attack. So I don't know if I personally don't think it kills the market. I don't think when you're worried about tax, your initial reaction isn't, oh, I'm going to invest less. It is maybe I'm going to take some money out prematurely. So that could be the case. Or the other thing that you think about is, okay, I'm going to move to a different country and then take it out there and pay no tax. No pointing your fingers here.
I don't know why you're still there, man. Yeah, look, I
don't think it will be a market killer, but
it's not.
It will have some impact. Yeah.
It's not a market killer, but if you do have crypto gains right now, it might be the right move to lock in the current capital gains. I don't really know how quickly they'd be able to enact a new policy around that, or how aggressive they would be. But I would be unsurprised if capital gains tax goes up at some point over the next 5 years. So it might make sense to lock them in if you've had a good bull market so far.
All right. Next question from Mark on the Real Vision website. What would you both do to preserve your assets if Russia and NATO start the next world war? Living in Europe is slowly becoming a concern to me. World War III. What do you do to preserve your assets in World War III?
It depends. If you're in direct line of conflict, I think just kind of get out of there. I guess I don't know which assets do well in a World War III scenario. I actually haven't looked at what assets did well in World War II or World War One. I would guess defense stocks are probably one of the only things that do well. I think gold, and people have said, Bitcoin might do well in a crisis there. It probably goes down a lot at first and then maybe rallies afterwards. So I think Bitcoin is probably a decent thing to own, but prepare for volatility. I guess owning treasuries might not be a bad move there. Maybe US treasuries. You can imagine they normally rip on whenever there's a big uncertainty in the world. So it's difficult to say that. I don't think we're headed to World War III. In fact, I think the next moves here will be some form of de-escalation. But I would guess things like gold would probably be my number one asset to own if you're really, really scared about that.
I personally would liquidate everything into Bitcoin, into a new I'd create a new Bitcoin wallet. I'd memorize my seed phrase and then just destroy any evidence of it or whatever. And I would put all my money into that wallet and that would be it. And then no one can touch it apart from me, basically. Yeah. I wouldn't even have the wallet installed on my laptop with the money in it. I'd just like nuke my whole laptop and everything and just have it memorized.
I like
in my head. That's the beauty of Bitcoin, and I guess to an extent crypto as well. But like, you can just do that, and then I just have this like 12 or 24 word seed phrase, which gives me access to all my pennies in Bitcoin. So,
yeah, have you looked into bunkers around the UK? I look at them around Portugal. They haven't really reached Portugal yet, but disaster recovery is a big thing in the US. It's less big. It feel like in Europe. Maybe that is a business idea. You should get into.
Go up to North Holt and
oh yeah, God, yeah, that's where we used to have to go when we worked in the city.
All right, next question. Last week you highlighted the potential for Toncoin. Can you share your view on what you think would be a good entry point? So how's Toncoin doing now? I'm curious to see a chart of it.
Yeah, I mean, the best entry for Toncoin was last year. The second best entry is probably now. It does feel as though they're getting a lot more integrations, particularly with Tether. Tether, interestingly, Binance is now allowing Tether withdrawals and deposits on Toncoin. Huge users, like we've already spoken about, potential, and particularly through this gaming angle. The one thing there is the tokenomics and the idea that they still got 50% of the token still to be vested, and we've seen a lot of that sort of FUD with other coins.
It's just a stable coin, isn't it? It's barely moved. Like if you over 5 days, it's down what, like 15%
massively
or something.
Outperform though, right? They're still.
Yeah,
I mean,
but
I think you have to zoom out here slightly. This is a 5
you zoom out a little bit, yeah, but like year to date,
it's done pretty well. I would say, but
yeah, as far as altcoins go, it's a massive outperformance. So
I don't think that does more than another 2x. Let's say near term, that would take it to around Solana's market cap, and it doesn't really feel like it's there yet. But
yeah,
but I do think it's going to be a big outperformer. If you own altcoins, I still think Ton is going to be a big outperformer there.
Yeah. All right. So the conclusion there is now is the second best entry point since last year.
You could play the other
financial advice.
The other way to play this is Notcoin, which is the number one meme coin or gaming coin on Ton. I think it's trading about a $1.5 billion market cap. That, given that Ton is about half the market cap of Solana, and Solana meme coins kind of topped out around 4. Maybe you could still play that, but that's probably only a 2x too. But yeah, that's been the most popular like high beta way to play Toncoin is Notcoin, which is the meme coin. So maybe dance in those streets. That's down, I think, something like 50% over the last week or so. So maybe that's a better entry if you want to have some high beta Ton exposure. Buy Notcoin.
This next question is from RM. I think this is a really interesting question. So USD JPY is about to make its highest weekly close since 1990. What are your thoughts on this? So USD yen. What are your thoughts on dollar yen? I guess is the way I should pronounce it. I'm not an FX trader. What are your thoughts on this and the potential impact?
I mean, I'm just not that bullish on the yen. I think the dollar, honestly, I think will continue to strengthen. Although it has its own problems, I just think it will continue to strengthen versus most major currencies, barring maybe like the Swiss franc. But like, yeah, I think dollar as will be a flight to safety asset kind of globally over the next 20 years for fiat. So I'm bullish on the dollar versus dollar yen. I think
this had a massive impact on US Treasuries a few weeks ago, right?
Yeah.
Because of how many US Treasuries exposure the Japan has, and there was that massive like sale or dumping of it. I think it was like maybe 2 months ago or a month ago. I think there was that day when 10 years spiked all the way to like 5% or something like that. Like
that is the main risk. That's the main risk is that the DOJ, the BOJ step in to defend this, which they have already to the tune of about 75 billion, I think, so far, or at least that was at the end of May. I haven't looked at the June figures, but they are defending this, and they are, I think, the number one foreign country to own US Treasuries, maybe alongside China. I think Yellen basically had to call them up and say, stop selling. So you could see a widening of US Treasuries on the back of this. And obviously the US has got to finance a gargantuan amount of debt with where it's at right now. And given the interest payments are already above, I think they're like 1.2, 1.3 trillion right now, they can't really see high yields. So I think that what this may do is force the Fed to lower rates. That's probably where we end up. Like if you read through this, I don't think the US can continue to keep rates as high as they are just globally, given their backs are against the wall with who actually owns their debt. So that's probably how this plays out. And maybe you're starting to see the data point that way anyway. So maybe this does speed up 2 rate cuts this year.
Yeah, that's what I think. I think the answer to this, or the defense mechanism to this, is actually speeding up rate cuts in an environment where you actually, in my opinion, can now afford to have rate cuts before things get too ugly, I think.
Yeah.
All right, last question from Michael on YouTube. Ovi, are you still balls deep in WIF? I do still own, I think maybe a few weeks ago, we talked about how I bought a lot of WIF. I converted all my Solana into WIF. The amount that I converted, I sold into fiat actually back when a week or 2 ago when WIF was around 3.5. But I've still kept a large moon bag of WIF since then that I've been holding for all of this year actually, and I'm still holding it. So I think for me, unless I have like a in real life reason to need the cash, like buying real estate or something like that, then I wouldn't be selling it here. I still think, despite what I said earlier about ETH, I do think Solana can come back as an ecosystem. And just like how we spoke about how Pepe has been outperforming and moving strongly with ETH, I think with it is the same to Sol. So for me, it's actually a good point to keep holding and just kind of like, I don't know, days like today and weeks like this week and months like this month, to be honest with you, you count your lucky stars that it's summer, you can go out and play golf and do other things rather than sit there looking at your screen and crying. So I think, if you're confident in your positions, you just don't look at them when days are down and look at them when days are up, and you feel happy. And that's my guide to investing.
What that response. So yes, he still holds a big bag, but he's less sure about it. But it's he's going to go out and play some golf, so he doesn't have to look at the chart.
Yes, that's basically it. All right. Well, I think with that we can wrap it up for this Friday. I think. Oh, the market did once again nuke during the show as Bitcoin hits new lows of 63.6K. So I was going to say I think at least the market didn't nuke this time, but it did. So we're now 4 for 4.
Buy here.
4 for 4 in the market, nuking every time we do the show, and us claiming that we're buyers. Good luck. But yeah, thanks everyone for tuning in. That was REKT Vision. Make sure you're following us on X, OSF_REKT, REKT Mando, and Real Vision. Also, make sure you sign up to Real Vision Crypto. That's realvision.com/RVC to access our monthly AMAs. And we will see you next Friday at 11:30 a.m. Eastern Time and 4:30 p.m. British Summer Time. Have a good weekend, everyone.
Have a good weekend, guys.